Hi friends, this is your host and host CA Parimal Singhal. I am back with a long desired, long demanded and long awaited classes for you which is on Income Tax Act 2025. This series of classes are going to be in English language. Many of our students, especially from the south of India, are demanding the classes to be held in English. So here I present before you the classes on Income Tax Act 2025 purely in English language. We would be covering the entire act, the entire new law, which is going to be enforced with effect from 1st of April 2026 in India. It shall cover the income any person or SSC shall earn starting from 1st of April 2026 and ending on 31st of March 2027. The first and foremost tax year in the history, tax direct taxation history of India shall be 26-27. The long awaited and long confusing concepts of assessment year and previous year have been done away with by the advent of this new law, Income Tax Act 2025. And now onwards, starting from the first tax year 26-27, you won't be using the terms previous year and assessment year. So let's start without any further ado the fresh series on Income Tax Act 2025, that too in English language. You can see on your screen this document is on Income Tax Act 2025 and it includes tabular mapping of sections vis-a-vis Income Tax Act 1961. In this document, we will be comparing the new law sections with the old law sections. Start by comparing the new law sections with the old law, that is 1961 sections. Let's start with the first chapter first. The chapter 1 is preliminary. On the left hand side, you will see the sections of the new Act 2025, and on the right hand side, you will see the sections of the old Act 1961. Let's compare the two. The section number 1, as usually is in all the laws, is on short title, extent, and commencement. Obviously, it had the same section number in the old law too. Then the second section on definitions is section number 2, and in all laws definitions are given at the inception of the law itself under section number 2. So in 1961 Act also the same section number was given to the chapter of definitions. Then the third section in the new law expresses a new term coined for replacing assessment year and previous year, which is tax year. This new term has been coined and it shall remove a lot and lots of confusions which were prevalent there under the old law so far as interpretation of the sections were concerned due to the duality of the terms for a single period. And those two terms were assessment year and previous year. Under old law too, the same section number was there, but it did not express the term tax year. Instead, it had two terms. One was assessment year and other was previous year. Then chapter number 2. Chapter number 2 talks about basis of charge. As you all must be aware that in order to enable the government to charge any tax from the public, basis of charge or charging section is mandatory. Until there is a charging section in the law, government has no authority to collect tax, charge and collect tax from the public. So there is a chapter number 2 named basis of charge, which enables the government to charge direct tax and collect from the persons or assessees. The first section under this chapter is section number 4, which is charge of income tax itself. It is the charging section. It is the charging section. It had the same section number under the old law. Then comes section 5. Section 5 talks about the scope of total income. Scope of total income. And the same section explain the scope of total income under old law, section number 5. No change in the section number under the old law. Then there is section number 6, which explains residence in India, that the residential status. It talks about residential status, which is governed by the same section, section number 6 under the old law. Thereafter, section number 7, it talks about income deemed to be received and dividend deemed to be the income in a tax year. Under the old law 1961, it was covered, these two concepts were covered by two sections, section number 7 and section number 8. Under new law, only one section covers both the concepts, deemed to be received and dividend deemed to be income in a tax year. But under old law, there were two sections, section 7 and section 8, encompassing these two concepts. Then comes section 8. Section 8 talks about income on receipt of capital asset, or stock in trade by a specified person from specified entity. It is covered under section number 8 under the new law, whereas there was section number 9b under old law, which talked about these two receipts. Receipt of capital asset or receipt of stock in trade by a specified person from a specified entity. Then comes one of the most important sections of the income tax law, which is section number 9, read with schedule number 1. It talks about income deemed to accrue or arise in India. Deemed to accrue or arise in India. It was covered by two sections under the old law, which were section 9 and 9 capital A. Deemed to accrue or arise means, although it might not have directly seen or seemed to accrue or arise, it shall be deemed to accrue or arise in India, the income. Then comes last section of chapter number 2, basis of charge, which is chapter 10. Sorry, section 10. And section 10 talks about apportionment of income between spouses governed by Portuguese civil code. In India, in the state of Goa, still Portuguese civil code is applicable and it determines the apportionment of income between spouses. Except salary income, all other incomes are apportioned between the spouses under the Portuguese civil code. And specifically in the state of Goa, this law is still applicable. Earlier, in the old law, it was covered under section 5 capital A. I'm not mentioning Daman and Diu and Dadra and Nagar Haveli. They are also touched upon by these Portuguese civil code, but practically the state of Goa is primarily impacted by the application of this law, Portuguese civil code. That's why I don't mention Daman and Diu and Dadra and Nagar Haveli in this context. I only mention the state of Goa. So in income tax returns, you might have seen this section 5 capital A up till now under the old law. In the new law, it shall be governed by section number 10. Let's revise the sections or read them again. We have gone through two chapters. First, chapter number 1, which is preliminary. It has 3 sections, and normally all the laws in their preliminary chapter have 2 sections, 1 and 2. First is of short title and commencement, and second is of definitions. in this law of on income tax, there is one more section called section number 3, which defines tax year. And under the old law, under section 3, previous year and assessment years were defined. Apart from other concept, the corresponding concept to the tax year were previous year and assessment year, because this is a defining moment in the new law, or in the era of taxation, new era of modern era of taxation in India, that a radical fundamental change has been brought in the name of tax year. The long standing confusion which was caused by the duality of the years in the name of assessment year and previous year has been done away with. Then let's move to chapter number 2, which is on basis of charge. It has 7 sections from 4 to 10 under the new law. Section 4 talks about charge of income tax. It is the charging section, and it had the same section number under the old law. Then scope of total income is section number 5. It had the same section number in old law. Section 6 talks about residential status, and there was no difference in the section number under the old law in this case. Section 7 talks about income deemed to be received in India in a tax year, and dividend deemed to be income in a tax year. Under the old law, these two concepts were covered under 2 sections, with section number 7 and section number 8. Then comes section number 8 under the new law, which talks about income on receipt of capital asset or income on receipt of stock in trade by the specified person from a specified entity. There was section number 9 capital B under the old law 1961 for this topic. Then comes section number 9 under the new law, read with schedule 1, which talks about income deemed to accrue or rise in India. This is a very, very, very important section, deemed to accrue or rise in India, especially deciding the kitty or the bag of incomes which shall be added in the total income of a person. This section comes into play. This section also comes into play when we are talking about international taxation. Income deemed to accrue or arise in India. It helps the government or the revenue department in not letting the SSEs go untaxed if their income is derived directly or especially indirectly from the resources which are situated in India. It was governed by 2 sections, section 9 and 9 capital A under the old law 1961. Then the last section, section number 10 of the basis of charge, talks about apportionment of income between spouses, governed by Portuguese civil code. And it was covered under section 5 capital A under the old law 1961. What have we just done? We have gone through the mapping of the sections vis-a-vis the old law 1961. We have gone through these section numbers of the new law and studied that by which sections the same topics were touched upon under the old law. 2 chapters we have done. We will be doing the mapping in pieces. Likewise, we have done now. We have taken up 2 chapters only, and they covered 10 sections. Now we will discuss these 10 sections in detail before falling back onto the mapping exercise. First, once we are done with these sections in detail, we will get back to this comparison table, this mapping table, and will go forward from section number 11 and chapter number 3. Let's move to discussion in detail on chapter number 1, that is preliminary, and chapter number 2, that is basis of charge. The Income Tax Act 2025 as you can see on your screen, Income Tax Act 2025, 21st of August 2025 is the date when the President of India gave assent to this act, an act to consolidate and amend the law relating to income tax, be it enacted by the Parliament in the 76th year of the Republic of India as follows. Why 76th year? Because our constitution was enforced on 26th of January 1950. It was the first year. Then let's add 50 years to it, and we reached to year 2000, and then 25 years after this, because it has been given its assent on 21st of August 2025. Then 1950 first year, then 50 years make it to 2000, year 2000, and then 25 years make it to 2025. In total, these are 76 years. That's why it is enacted in the 76th year of the Republic of India. Let's go through chapter 1, preliminary. And first thing first, we will read section number 1. Section number 1 talks about short title, extent, and commencement of this act. Short title, the name of the act. The act may be called Income Tax Act 2025. It is the short title of the act. Then extent. Extent means where it shall apply. The geographical area to which this act shall apply means the extent. It extends to the whole of India. This act shall extend to the whole of India. If this is India, then it shall extend to the whole of India. From north to south, from west to east, it shall extend to the whole of India. Save as otherwise, subsection 3 of section 1, provided in this act, save as otherwise provided in this act, it shall come into force on 1st of April 2026. It is the date of commencement of this act. When it shall commence in our country, it shall commence with effect from 1st of April 2026. Come into force. So the section number 1 talks about short title, which is Income Tax Act 2025. Extent, that is the geographical area to which this act shall apply. It shall extend to the whole of India. And then the commencement, it shall come into force with effect from 1st of April 2026. That's why the first tax year shall be 2026-2027. Now let's jump onto section number 2, which consists of 112 definitions in all. 112 definitions. Let's read the first definition given in section 2, clause 1. The first definition is of accountant. Accountant shall have the meaning assigned to it in section 515 subsection 3 clause B. So accountant shall be the same person which has been mentioned under section 515 subsection 3 clause B. Normally it is the chartered accountant. We shall read section 515 subsection 3 clause B in due course. Let's move to subsection or clause number 2. Section 2 clause 2, that is the second definition, is of additional commissioner. Additional commissioner means a person appointed to be an additional commissioner of income tax under section 237 subsection 1. That is, a person who has been appointed as additional commissioner is known as additional commissioner, and it or he is appointed under section 237 subsection 1. Additional director, on the same lines, the definition of additional director is there, means a person appointed as additional director under 237 subsection 1. Then next definition is of advance tax, section 2 clause 4. Advance tax means advance tax payable as per chapter 19C. Chapter 19C. Advance tax means advance tax payable as per chapter 19C. So any tax which shall become payable as mentioned in chapter 19C shall be named as advance tax, shall be taken as advance tax. You people must know that the concept of advance tax is in existence because in order to run the country, government cannot wait for 12 months for you to earn income, thereafter decide your tax liability on that earned income and then pay tax to the government. Government needs money on a daily basis to run the country. That's why advance tax concept is there, in which government takes tax revenue in advance from the persons or SSCs so that it could finance its budget every fiscal. Next definition, a longer one, is of agriculture. Section 2, subsection clause 5 talks about agricultural income. It talks about agricultural income. Now we will go through agricultural income. Before discussing or deeping dive into the agricultural income definition, I will discuss three parties which have been used at different places in this definition. And those parties are: number one, receiver of rent or revenue; number two, cultivator; and number three, receiver of rent in kind. Let me explain with an example or two. Say there is a party called A and another party called B. What A does, A lets out the piece of land he owns to B for cultivation, and B ultimately grows crop on such piece of land and pays rental in terms of cash to A. In such case, A shall be categorized at number one and will be called receiver of rent or revenue, and B shall be classified at number two and will be called cultivator. Now let's take another example. Say A lets out his land to C, and what A does, what A agrees with C is rental in kind and not in cash. A asks C to share 40% of the yield C shall grow on the land with A in consideration for rental. In that case, A will be receiving rent but not in cash, uh, rather in kind. And in such case, A shall be classified at point 3 and will be called receiver of rent in kind, and C shall be the cultivator. So there are three parties. One is receiver of rent or revenue, second is cultivator, and third is receiver of rent in kind. Keeping these three numbers in mind, 1, 2, and 3, we will be reading our section. Now let's deep dive into the section 2 clause 5, which talks about agricultural income. Agricultural income means there are four sub clauses which define which incomes are covered under agricultural income. First is A, then B, thereafter C, and at last D. There are four types of incomes which have been classified as agricultural income under Income Tax Act 2025. The technical language of the law might seem to be a bit difficult in the beginning, but rest assured, I will explain each and everything uh, clearly and in a lucid manner. First subclause, section 2, clause 5, and then subclause A. Any rent or revenue derived from a land which is situated in India and is used for agricultural purpose. It means you are deriving rent or revenue from a piece of land. Two conditions should be satisfied. Firstly, it should be situated in India. It must be an Indian land. And secondly, it should be used only and only for agricultural purposes. If the land is being used for agricultural purposes, number one, and it is situated in India, then the rental income which you are deriving out of that land shall be termed as agricultural income. Second point, subclause B, any income derived from such land. Now we're talking about any income. It has been divided into three parts. Which incomes it is talking about? First is agricultural income. Agricultural income. Then the performance by a cultivator, second party in our example, or receiver of rent in kind, third party in our example, of any process ordinarily employed by a cultivator or receiver of rent in kind to render the produce raised or received by him fit to be taken to the market. what we have studied? We have studied that the income should be from a process. Which process? Again, two conditions. Such process which is ordinarily employed by party 2, which is party 2, cultivator, or by party 3, which is party 3, receiver of rent in kind. Such process should be ordinarily performed or ordinarily employed by party 2, that is cultivator, or party 3, that is receiver of rent in kind. And why such process is being employed or performed? To render the produce, the crop, raised or received. Raised by whom? Cultivator. Or received by whom? Receiver of rent in kind, fit to be taken to the market. So income out of a process, and what kind of process? Which renders the crop, the produce out of the land, raised by the cultivator or received by the receiver of rent in kind, fit to be taken to the market. In simple words, I would say process which renders produce fit for the market. If you are performing any process which does this thing and you earn any income out of it, that it shall be called agricultural income. Third point in subclause B talks about sale of produce. Sale of produce by party 2, that is cultivator, or party 3, that is by receiver of rent in kind, raised by the cultivator or received by the receiver of rent in kind. So when the crop which has been raised by the cultivator is sold in the market, or the crop which has been received as emolument by the receiver of rent in kind is sold, the income out of such sales shall also be agricultural income, provided in respect of which no process has been performed other than the process of the nature described in item 2. Crop which is being sold, in respect of such crop, no process other than the process which has been discussed in item 2 above. And which was that process? Such process which only and only renders the crop suitable for sale or fit for the market. Only such process should have been done on the crop which renders the crop fit for the market. If such is the case, then in case of sale of that crop by the cultivator or the receiver of rent in kind, the income generated shall be agricultural income, provided process should not be any sophisticated one. It should be only a simple process which renders the produce fit for the market. For example, there is a process called winnowing. Winnowing. What does it do? It separates the husk from the granules, grains. Say we are separating husk from wheat grain and then selling that grain in the market. Then this ordinary process is normally carried on by the either by the cultivator or receiver of rent in kind everywhere across the country by the agriculturists. That's why this process has been allowed in the definition of agricultural income. If you are doing just this process and charging something for the process itself, that is also an agricultural income, or you are selling the produce on which such process has been performed, then the sale proceeds shall also be agricultural income, provided nothing other than this normal process which renders the produce fit for the market should have been done. For example, if you grow potatoes and convert them to chips and after packing them sell them as chips in the market, then the sale proceeds of those chips shall not be termed as agricultural income, because that process is a food processing process, that is not a normal process which is ordinarily employed by either cultivator or receiver of rent in kind. So the process should not be a food processing process. I hope it is crystal clear now. Third income. First was rental. Second were three. First agriculture. Second process income. Third sale income. Now Third income, which shall be termed as agricultural income, is income from building. Let's read. Income from building. Any income derived from any building owned and occupied by first party, receiver of rent in, sorry, receiver of rent or revenue, first party. Which is the first party? This is the first party. This one is the first party. So any income derived from any building, which building? Owned and occupied by first party. Which is first party? Receiver of rent or revenue. Or occupied by second party or third party. Second party is cultivator or third party is receiver of rent in kind. Of any such land with respect to which, or with respect to the produce of which, any process mentioned in subclause B second and third point is carried on. There is a building and we are talking about the income being generated out of that building. And we are talking, when we are talking about this building, we are mentioning a fact that with respect to the land which is associated with the building, or with respect to the produce, any process which is mentioned in subclause B second and third is carried on, and other than that no process should have been carried out. Which process we mentioned in clause, we read in clause B, point 2 and 3? Clause B, this is the clause B, and this is point 2 and this is point 3. In point 2 we studied about normal processes which render the produce fit for the market, and in clause 3 also we studied about a process which is not other than the process mentioned in point 2. What we studied in point 3? In respect of which no process performed other than item 2. So basically in item 2 and item 3 we talked about the same process, an ordinary process which is carried on either by the cultivator or the receiver of rent in kind, which renders the product fit for the market. Now in subclause C we are talking about an income which is being generated out of a building. This building could be either owned and occupied by the first party or occupied by the second or third party. And when we are talking about this building, basically the building is standing on a land. So when we talk about this land or the produce which has been generated out of that land, there is a condition that no process other than the process mentioned in subclause B point 2 and 3 should have been carried on that produce. Now there are two conditions which are applicable on such building also. The first condition was no process other than that ordinary process which makes the produce fit for the market should have been performed. First condition. Now there are two other conditions which are applicable on the building, where such building, what is the condition? Is on the land or in the immediate vicinity of such land. That building should be either on the land, zameen par, or in the immediate vicinity of such land, and that land is assessed to land revenue in India or is subject to a local rate assessed and collected by government officers as such. The land should be either assessed to land revenue in India or there should be a local rate which is being collected by government officers on such land, or where the land is neither so assessed to land revenue nor it is being subject to local rate by government officers, then this land should not be situated in any area as specified in clause 22 subclause 3 capital A point and capital B point. In short, that land should not be urban agricultural land. Let me repeat. We are talking about an income which is being generated out of a building. That building should either be owned and occupied by first party or occupied by second or third party. There is one condition that the land with which such building is associated, or the crop which is being generated on that land which is associated with the building. On that crop, no process other than subclause B point 2 and point 3 process should have been done. And there are two conditions on the building, and the first condition is either the land should be on the land, agricultural land, or in the immediate vicinity, quite near to such land, and the land should be assessed to land revenue or should be assessed and subject to a local rate by the government officials. And if this is not the case, that is, it is neither assessed to land revenue nor assessed to a local rate, in such case, this land should not be an urban agricultural land. Where it has been mentioned, urban agricultural land is a nomenclature which is being given by me. It is not mentioned in the law, but the characteristic or the nature of the land is such that it throws it out of the limits of a village. That's why I have been calling it urban agricultural land. So clause 22 of section 2, subclause 3, capital A and capital B point mentions such land which is urban agricultural land. So if the land which we are talking is not subject to land revenue or not subject to local rate, then it should not be an urban agricultural land. In such case, the income which is being generated out of the building on such land shall be agricultural income. Now there is another condition for building. What is that condition? This is second condition. Such building is required as a dwelling house. Why that building is required? It is required as a dwelling house to live, or as a storehouse to store the crop or other things related to harvesting, or other outbuilding. It is required as other outbuilding. There should be three uses of that building. It should be required either as a dwelling house, or as a storehouse, or as an outhouse. By whom? By first party, receiver of rent or revenue, or second party, cultivator, or third party, receiver of rent in kind. Why? By reason of his connection with the land. Why any of these three parties need this land? Because of their connection with the land. Because the three parties are connected with the land, that's why they need that building. And they need that building either as a dwelling house to live, or as a storehouse to store the crops and other things, or as an outhouse to keep a watch on their land and crops. So these are the two conditions which are mandatory over the building in order to classify the income generated out of that building as agricultural income. I know the language of law is not that easy to comprehend it in the first instance, but I have been trying to explain it from different angles, and I will also explain this particular clause 5 on agricultural income through a diagram, and that time the structure and the frame of this clause shall fit into your brain very easily. So wait. Now fourth income. There are four incomes: A, rental; B, agricultural income; and process income, sale income, and then building income. And now fourth is nursery income. Nursery income: any income derived from saplings or seedlings grown in a nursery. Any income derived from saplings or seedlings grown in a nursery. You are operating a nursery and you are growing saplings and seedlings there, and you are selling them to generate income. The income derived out of those saplings and seedlings shall be agricultural income. So we have done the meaning part of the agricultural income, and the exclusion part is remaining but shall not include. We'll be doing it in a bit. Let me explain this clause again, that too with the help of a diagram. You can see on your screen section 2 clause 5 talks about agricultural income. First thing first, there are three parties involved in this clause. I will discuss those three parties first. Which are those parties? First one is receiver of rent or revenue. Second is cultivator, and third is receiver of rent in kind. Receiver of rent or revenue, you are the owner of the land, you have given your land on rent, then that's why you are receiving rent, and that rental income or revenue is agricultural income. When we talk about revenue, normally government department receives revenue on agricultural land. Second is cultivator. Who is cultivator? Who is growing crops on the land. And receiver of rent in kind, I told you, if you give your land on rent and receive in return rental, not in terms of cash but in terms of a share in the crops grown by the cultivator, that person is called receiver of rent in kind. Section 2 clause 5 agricultural income. Now in the explanation of this clause, I have used number 1, number 2 and number 3 in place of these parties names. What I have used? 1, 2 and 3 in place of these parties names. So bear that in your mind. Now there are two parts in this clause. One is means part and second one is exclusion part. Means part we have done with the bear. Now let me revise it for you to understand it clearly. There are four types of incomes classified as agricultural income. A is rental income. B, any income from such land, which are three: agricultural income, process income, and sale income. And then third income is building income. We did this. And fourth income is nursery income. Rental income from Indian land used for agricultural purposes. I told you the land should be situated in India and it should be used only on and only for agricultural purpose. In that case only the rental income from such land shall be classified as agricultural income in terms of Income Tax Act 2025. Second is any income from such land in terms of agriculture. You did agriculture, that's why the income generated from such land is agricultural income. Or you performed a process, and who performed this process? Party second or party third. Which is party second? Party second is cultivator and party third is the receiver of rent in kind. So any process performed, any process performance to render, produce, raise, received, fit for the market. You are generating an income from such land by any process performance to render, produce, fit for the market. Then such income shall be agricultural income. Third is sale of produce raised or received by whom? Party second and party third. In respect of which I.R.O.W.O.W means in respect of which no process except second above performed, that is the general process which renders the produce fit for the market, only such process has been performed and then the produce has been sold, the sale proceeds shall be agricultural income. So in second point there are three income. First is out of agriculture, second is out of process performance, and third is out of sale proceeds. Now the third income, which is building income. This building should be owned and occupied by party 1. Which is party 1? Receiver of rent or revenue is party 1. Or occupied by party 2 or 3. Party 2 is the cultivator and party 3 is the receiver of rent in kind. with respect to such land or produce only B2 and 3 process must have been carried on. So we are characterizing the building. Building income shall be agricultural income, but there are some characteristics in that building. What are those? Building should be owned and occupied by receiver of rent or revenue. Or building should be occupied by party 2 or party 3. With respect to such land or produce only normal process which has been mentioned in subclause B point 2 and point 3 must have been carried on. Now there are conditions also applicable on the building. When these conditions are met, only then the building income shall be termed as agricultural income. What are those conditions? Building must be on such land or in the immediate vicinity of such land, that is quite near to that land. Plus, such land should be assessed to land revenue in India or subject to local rate by government officers. Or if not so assessed to land revenue or not so subject to local rate, then it is not urban agricultural land. If neither the land revenue is applicable nor the local rate by the government officials is levied on that land, particular piece of land, then there is one more leeway that if that land is not urban agricultural land, you will be saved and it shall be classified as agricultural income still. And once an income is agricultural income, it is exempt under Income Tax Act. Why we are studying agricultural income, or in the first place why we even need a bifurcation of income into agricultural and non-agricultural income? Because in India agricultural income is exempt from income tax. That's why we are studying this definition. Second condition for building. Second condition is building must be required as a dwelling house or storehouse or outhouse by first party or second party or third party due to his connection with the land. There are two conditions on building. First is it should be on land or in the immediate vicinity of the land. Plus, it should be assessed to either land revenue or local rate. And if it is neither accessible or assessed to land revenue or local rate, then there is third leeway, third concession, that if it is not an urban agricultural land, still the building shall be considered for agricultural income. Second condition for building is it must be required as a dwelling house, storehouse, or other outhouse by party first, second, or third due to his connection with the land, because that party is connected with land and these three parties are connected with land. The receiver of rent or revenue is connected with land, the cultivator is also connected with land, or the receiver of rent in kind is also connected with land. Because these parties are connected with land, that's why they need that particular piece of land. And that's why they need that particular building on that piece of land, either as a dwelling house or a storehouse or other out building. When both of these conditions are satisfied, the first condition was specifically about the land on which the building is situated or in the immediate vicinity of which the building is situated, and the second condition is particularly about the building, that it is either a dwelling house or a storehouse or other outbuilding. In such case, the building income or the income generated out of such building shall be termed as agricultural income. Again, building income. That building would be either owned and occupied by first party or occupied by second or third party. And with respect to such land or produce, only the normal process should have been carried on. No food processing is allowed. Apart from that, there are two conditions on the building. First is that it should be located on the land or in the immediate vicinity of the land, plus the land should be assessed to land revenue or local rate, or if it is not so assessed or subject to local rate, then it should not be an urban agricultural land. Second condition, building must be required either as a dwelling house or a storehouse or an outhouse by either by party 1 or party 2 or party 3 due to his connection with the land. This was clause C, building income. Last is nursery income from saplings or seedlings grown therein. If you are growing saplings and seedlings in a nursery and generating any income out of it, it shall also be termed as agricultural income. Hence, it shall be exempt from income tax. Now, after understanding the meaning part of section 2 clause 5 agricultural income, let's do the exclusion part, and let's do it from my notes first, and then we will jump to the bare. What does the exclusion part say? There are two exclusions from the definition of agricultural income. The first one talks about any income from subclause C, land or building. Any income from the land or building which has been mentioned in subclause C. We just did subclause C where we studied building income and the land associated with it. So if there is an income which is derived out of the land or building which has been mentioned in subclause C of section 2, if used for any purpose other than subclause A or B, if such land or building is used for any purpose other than subclause A or subclause B, including letting for residential or business purpose, then the income shall be excluded from the definition of agricultural income. There are two things. One is land or building, and second is the income derived out of such land or building. If this income which is being derived out of the land or building which has been mentioned in subclause C uh, has been derived from a purpose other than the purpose mentioned in subclause A or subclause B, then such income shall not be agricultural income, including the letting for residential or business purposes shall also not be agricultural income. What were the purposes in subclause A or B? Subclause A, the purpose was rental. In subclause A, the purpose was rental. And in subclause B, there were three purposes. First was agriculture, second was a process, simple process, and third was sale. So if you are neither doing agriculture nor doing a simple process nor selling the agricultural produce, if these three purposes are not being applied on the land or building mentioned in subclause C, then the income generated out of that land or building shall not be termed as agricultural income. What it implies? It implies that only the income which has been generated out of the land or building mentioned in subclause C plus the purpose should be that of subclause A or B, only then the income shall be termed as agricultural income. So the purpose should be that of subclause A or B, and the land or building should be that mentioned in subclause C. Only then the income shall be agricultural income, otherwise it shall be out of the purview of agricultural income. Second exclusion is transfer of urban agricultural land. If the land which has been mentioned under clause 22 subclause 3 point A or point B is being transferred, then the sale proceeds of the land shall not be termed as agricultural income. If any income is out of the purview of agricultural income, it shall not be eligible for exemption which is available for agricultural income. Why we are studying agricultural income definition? Because under Income Tax Act in India, agricultural income is exempt. That's why the bifurcation between agricultural and non-agricultural income becomes so important. So there are two exclusions. One is sale of urban agricultural land, and second is any purpose which is other than the purpose mentioned in subclause A or B, and any income using that other purpose from the land or building shall be excluded from the definition of agricultural income. Now let's move back to the bare. In bare, these are the exclusions. Agricultural income means and now but shall not include. Shall not include means excludes. First, the income derived from any building or land. Which building or land? Referred to in subclause C. arising from the use of such building or land for any purpose. Income derived from any land or building referred to in subclause C arising from the use of such building or land for any purpose, including letting for residential purpose or for the purposes of any business or profession other than agriculture falling under subclause A or B. First point says the income derived from any building or land referred to in subclause C arising from the use of such building or land for any purpose, including letting for residential purpose or business or profession other than agriculture falling under subclause A or subclause B shall be excluded from the definition of agricultural income. Income derived from the land or building referred to in clause C arising from the use for any purpose other than agriculture. You are generating particular income and you are generating it from the land or building mentioned in subclause C, but the purpose you are using that land or building for is not agricultural purpose, then the income shall not be agricultural income. So there are two conditions: the land or building should be agricultural land and associated building, and the income shall be generated using that land or building only for the purposes mentioned in subclause A or subclause B. Subclause A was rental, and subclause B there were three uses: agriculture, process, and sale proceeds. Second exclusion. What is second exclusion? Second exclusion says transfer of any land referred to in clause 22.3, that is subclause 3, point A or point B, that is urban agricultural land. If you are selling or transferring urban agricultural land, the sale proceeds or the income generated out of it shall not be agricultural income. This way, we complete a technical and lengthier subclause 5 of subsection 2, which talked about agricultural income. So friends, our next definition in the order is of amalgamation. We are going to talk about marriage, but not simple marriage. It would be a kind of mating cannibalism, like in case of black widow spider, where during mating the black widow spider female eats up its partner. So is the case of amalgamation. It is a marriage, but in amalgamation, the company or companies which are amalgamating lose their existence. They wind up and merge into the existing company or a new company. In nutshell, the existence of the amalgamating company is zero after amalgamation. Only the amalgamated company into which the amalgamating company has merged remains. The amalgamated company could be an existing company or a new company. Let's go through the definition of amalgamation. Amalgamation in relation to companies means, it is an exhaustive definition, the merger of one or more companies with another company, or merger of two or more companies to form one company. Either there is a merger of one or more companies with another company, or there is a merger of two or more companies to form one company. That's why I told you that the amalgamated company could be either an existing company or a new one. The company or companies which so merge being referred to as the amalgamating company, or companies amalgamating company or companies, and the company with which they merge or which is formed as a result of such merger being referred to as the amalgamated company, in such a manner that all the property and all the liabilities of the amalgamating company or companies immediately before amalgamation become the property or the liabilities of the amalgamating company by virtue of amalgamation. The manner of of the merger is such that all the property and all the liabilities of the amalgamating company or companies immediately before merger become the property of the amalgamated company by virtue of amalgamation, that is due to amalgamation. They come to the amalgamated company. For the sake of simplicity, I would be calling amalgamated company a new company, although in all cases it is not necessarily a new company, but for the sake of simplicity, I would be calling amalgamated company a new company and the amalgamating company or company is old company. So the property or liabilities come to the new company by virtue of amalgamation and not because of any other agreement or deal. Third condition, the shareholders holding not less than three-fourths in value of the shares in the amalgamating company, that is old company or companies, other than shares already held therein immediately before the amalgamation by amalgamated company or by a nominee for the amalgamated company or by its subsidiary, become shareholders of the amalgamated company by virtue of amalgamation. What third condition implies? That say A is an amalgamating company and B is an amalgamated. That is, A is an old company and B is a new company. Just before merger, A had a share capital of rupees 100, and out of that 100, rupees 10 was already held by B, either by B itself or by its subsidiary or by a nominee of B. So the balance share capital of A, which is not held either by B or its nominee or subsidiary, is rupees 90. This condition says that out of this balance share capital in value rupees 90, at least 3/4, that is 75% shareholders should become the shareholder of the amalgamated, that is new company, that is company B in our example. Shareholders holding in value at least 3/4 or 75% of the balance share capital should become the shareholders of the new company. By virtue of the amalgamation, and all these three things should be happening by virtue of amalgamation, due to amalgamation. Otherwise, then, as a result of the acquisition of the property, otherwise then as a result of acquisition of the property, it should become by virtue of amalgamation. Liabilities should become by virtue of amalgamation, and all the property should come in by virtue of amalgamation. Otherwise than as a result of acquisition of property of one company by another company, pursuant to purchase of such property by other company, pursuant to purchase of such property by other company, or as a result of the distribution of such property to the other company after winding up of the first mentioned company. So it is imperative that the property or the liability or the shareholders of the amalgamating company or companies that are the old companies shall become the property, liabilities or shareholders of the amalgamated company, that is new company, by virtue of amalgamation only, and not by virtue of purchase of property by other company uh, or as a result of distribution of such property upon winding up of the first mentioned company. The transfer of assets, liabilities, and the shareholders should be a result of scheme of amalgamation and not should be a result of an agreement of acquisition of assets by one company of another, or should not be a result of distribution of assets due to winding up of the amalgamating company. This should be crystal clear. Now, let me give you two examples on merger. In first case, let's say there are two companies A and B, and A merges into B. In this case, A loses its existence, it gets wind up and gets dissolved into B. This is a case of merger when the amalgamating company which is being merged and the amalgamated company in which the amalgamating company is merging were already in existence. Both the companies were already in existence. A was there and B was there. Once the amalgamation is done, A shall shut down, shall wind up. Another case, there are two companies on left hand side A and B and one company on right hand side, company C, which has been newly incorporated just for the sake of amalgamation only. What is happening? A and B are merging into C, are merging to form C. They are merging together to form a new company C, because C was not already in existence as was the case in first example. B was already in existence, but in this case A and B are merging to form a new company C. Here A and B were already in existence, but C was not there in the beginning. C just formed as a result of the merger of A and B. Now, after merger amalgamation, what shall happen? A and B shall shut down, shall liquidate, shall wind up, and C shall remain. C shall remain. In first example, A and B both were existing. A merged into B, A wound up, and B remained as an amalgamated company. In second example, A and B were existing. The new company was not there. A and B merged to form a new company C. A and B liquidated, wound up, and C was created. C is amalgamated company and A and B were amalgamating companies. So this was amalgamation. The conditions are all the property, all the liabilities immediately before merger become the property and liabilities of the amalgamated company, that too by virtue of amalgamation. By virtue of amalgamation and not by virtue of any other agreement which has been mentioned in the last para. And the shareholders holding minimum 75% in value of the shares of the amalgamating company should become the shareholders of the amalgamated company, and these shares should be shares other than the shares already held by the amalgamated company or its nominee or its subsidiary. And last but not the least, in last para we studied that this transfer of property or uh, liability or shareholders should be otherwise than as a result of acquisition. It should not be a result of an agreement of acquisition of assets of the other company. It should be a result of only and only a scheme of amalgamation. Next definition is annual value. Where does annual value come into play? Annual value come into play in the chapter of income from house property. Annual value in relation to any property means its annual value as determined under section 21. Any property, when it comes to calculating its annual value is determined under section 21. We shall study it in due course, the section number 21. Next definition is that of appellate tribunal. Appellate tribunal. Appellate tribunal means appellate tribunal constituted under section 361. Appellate tribunal, that is ITAT, income tax appellate tribunal, is that tribunal which is constituted under section 361. As simple as that. Then comes approved gratuity fund. Approved gratuity fund means a gratuity fund approved and continues to be approved by approving authority as per Part B of Schedule 11. Approved gratuity fund is that gratuity fund which is already approved and continues to be approved, which is approved and continues to be approved by approving authority as per Part B of Schedule 11. Approved superannuation fund, on same lines, we will study the meaning of approved superannuation fund. It means a superannuation fund or any part of superannuation fund. It means it can be approved in bits and pieces, which is approved and continues to be approved by approving authority as per Part B of Schedule 11. Superannuation fund, approved superannuation fund means a superannuation fund or any part of it which is approved and continues to be approved by the approving authority under Schedule 11 Part B. Now, next definition is that of SSC. Next definition is that of SSC. SSC means, it is also an exhaustive definition. SSC means a person by whom any tax, any other sum of money. When we say any other sum of money, the scope of the definition gets infinitely wider. Any other sum of money is payable under this act and includes, to start with, it was an exhaustive definition because it is started with means, but now it also says includes. Whenever a definition is an inclusive definition, its scope is quite wider, and what all is included after the word includes is not the exhaustive inclusion. Other things could also be added to the definition if required, so far as interpretation of the definition is concerned. So after includes, we are going to read 3 points: A, B, and C. A, B, and C. What it includes? It includes every person in respect of whom any proceeding under this act has been taken, is going on for assessment of his income or loss sustained by him or refund due to him. For assessment of his income or loss sustained by him or for refund due to him. Why the proceeding has been undertaken? For assessment of his income, loss, or refund. Next point, for assessment of the income of any other person in respect of which he is assessable. The scope gets wider and wider. In first point, his own income, his own loss, and his own refund was talked about. In second point, the scope is getting wider as we are talking about income of any other person in respect of which he is assessable. For example, e.g., income of a minor child, any other person, minor child. Income of a minor child is accessible either in the hands of mother or father, as the case maybe. We shall discuss it in due course. For the assessment of the income of any other person in respect of which he is assessable or of the loss, first we talked about income, now loss sustained by such other person or refund, likewise as was given in point 1. Income, loss, refund of own in point 1, income, loss, or refund of any other person in respect of which he is assessable is covered in point number 2. So what the definition of SSC includes? It includes every person in respect of whom any proceeding has been taken under this act for assessment of his own income, loss or refund, or for assessment of any other person's income, loss or refund in respect of whom he is assessable, or in respect of which he is assessable. Second inclusion is the definition of SSC includes every person deemed to be an SSC under this act. Say there is Mr. David, a resident of United States of America. There is an income called X income X, which is accessible in India due to some business connection or due to some permanent establishment he is having in India. But because he is not available to be assessed in India, there is an agent called Mr. Sohan who is in receipts of the sale proceeds, which are an outcome of the business run by Mr. David in India. Then in that case, the agent of Mr. David, Mr. Sohan, shall be deemed to be an SST under this act. And in case of Mr. David, Mr. Sohan shall be assessed for the income of Mr. David. This is an example of deemed SST. In case of a non-resident, his agent in India can be deemed, if required, to be an SSC. Now, next case, next inclusion is of every person deemed to be an SSC in default. In second point, B point, we talked about a deemed SSC. In C point, we are talking about deemed SSC in default under this act. Who is an SSC in default? Simply, if there is a liability, income tax liability to be paid by Mr. X, and as per rule, he gets 30 days to make the payment. If he does not pay that liability by the end of day 30th, from 31st day beginning, he becomes an SSC in default. So if a person defaults in payment of his income tax liability, he automatically becomes SSC in default. We studied the definition of SSC. It is divided into two parts: a means part, that is exhaustive part, and includes part, that is an inclusive part. The scope of inclusive part is quite wider. Means part says a person by whom any tax or any other sum of money is payable under this act. And the inclusive part says three cases: every person in respect of whom any proceeding has been undertaken for the assessment of his own income, loss or refund, or for the assessment of income of any other person in respect of which he is assessable, or loss of the same person or refund of the same person in respect of which he is assessable. Then the second inclusion is every person who is deemed to be an SSC, and third inclusion is every person who is deemed to be an SSC in default. These are the four persons which are covered in the definition of SSC. So there are four persons in the definition of SSC. It is divided into two parts: means part and includes part. In mean part, there is person 1, and in includes part, there are persons 2, 3, and 4. So, in the definition of SSC, there are in all four persons who could be SSC. The first person is covered in means part, and the other three are covered in the includes part. In the means part, person 1 is covered, and in the includes part, three persons 2, 3, and 4 are covered. These are A, B, and C. The person 2 shall be a person only if a proceeding has been taken against him under Income Tax Act. And person 3 and 4 are deeming fictions. They are deemed to be an SSC under the Income Tax Act. Actually, they are not the SSC. So in all, there are four persons who could be SSC under Income Tax Act. First one belongs to the means part. Who is that? By whom any tax or any other sum under this act is payable. And the other three are covered under includes part. And what does the include part say? Include part say that one person is an SSC only if any proceeding has been undertaken against him under the act, or and the third and fourth persons are the deeming fiction cases where they are deemed to be SSCs under Income Tax Act. Next definition talks about AO, assessing officer. It is also an exhaustive definition because it says means. Assessing officer means the assistant commissioner or the deputy commissioner or assistant director or deputy director or the income tax officer who is vested with relevant jurisdiction by virtue of directions or orders issued under section 241(1) or 241(2) or 241(3) or any other provision of this act. The clause A of section 2 clause 12, subclause A of section 2 clause 12, what we studied: AC, that is assistant commissioner; DC, that is deputy commissioner; AD, that is assistant director; DD, that is deputy director; or ITO, that is income tax officer, who is vested with relevant jurisdiction by virtue of directions or orders issued under section 241 subsection 1 or subsection 2 or subsection 3 or any other provision of this act. Now comes subclause B. There was subclause A under clause 12. Now comes subclause B. It says the additional commissioner, the additional director, the JC, that is joint commissioner, or JD, that is joint director, who is directed under 241 subsection 5 clause B to exercise or perform all or any of the powers and functions conferred on or assigned to an AO under this act. The additional commissioner, additional director, joint commissioner, joint director become assessing officer if they are directed under 241 subsection 5 clause B to exercise or perform all or any of the powers or functions conferred or assigned onto an assessing officer under this act. Originally, AC, DC, AD, DD, and ITO, these 5 designations are assessing officers. Additionally, the additional commissioner, additional director, joint commissioner, joint director shall play the role of assessing officer once they have been directed to do so under section 241 subsection 5 clause B. Otherwise, generally, the assistant commissioner, deputy commissioner, assistant director, deputy director, and ITO, these 5 parties are assessing officers. Let's revise. Assessing officer means ACDC, ADDD, or ITO. ACDC means assistant commissioner, deputy commissioner; ADDD means assistant director, deputy director; and ITO means income tax officer. Additionally, if directed under 241 subsection 5, additional commissioner, additional director, joint commissioner, joint director shall also become income tax officer. But originally, who are income tax officers? These 5. These 5 are income tax officers. Next definition in the order is that of assessment. Assessment. Assessment includes, this is an inclusive definition, reassessment and recomputation. What the general meaning of assessment is there in the term assessment, but it also includes reassessment and recomputation. Then comes definition 14 of assistant commissioner. Assistant commissioner means person appointed to be an assistant commissioner of income tax or a deputy commissioner of income tax under section 237 subsection 1. Who is an assistant commissioner? A person appointed to be an assistant commissioner or to be a deputy commissioner of income tax under section 237 1. This implies that AC is equal to appointed to be a AC or DC. Who is an AC? Who has been appointed either to be a AC or to be a DC. Then comes assistant director. Assistant director means, now we can guess what shall be the definition. A person appointed to be an assistant director or a deputy director under section 237(1). On the same lines as that was the definition of assistant commissioner, the definition of assistant director has been framed. A person appointed to be an assistant director or appointed to be a deputy director under 237(1). So this implies that the assistant director is equal to assistant director or deputy director. Section 2, clause 16 talks about average rate of income tax. This is a mathematical term. Average rate of income tax means the rate arrived by dividing the amount of income tax calculated on total income by such total income. Say your total income was rupees 10 lakhs. Say your total income was rupees 10 lakhs. Your total income, say your total income was rupees 10 lakhs, and the tax liability was rupees 2.7 lakhs on that 10 lakh of total income. How will you calculate the average rate of tax? Pretty simple. 2.7 lakh, that is the amount of income tax calculated on the total income, that is rupees 10 lakh. So 2.7 lakh divided by 10 lakh is equal to 27%. This is your average rate of tax. Simple mathematical formula. Pardon me. Next definition is that of block of assets. Friends, next definition is of block of assets. Next definition under section 2 clause 17 talks about block of assets. 2 clause 17. Block of assets means, it is an exhaustive definition, a group of assets falling within a class of assets comprising of tangible assets and intangible assets. Tangible assets being buildings, machinery, plant or furniture. Intangible assets being know-how, patents, copyrights, trademarks, licenses, franchises, or any other business or commercial rights of similar nature. Not being goodwill, as goodwill has been kicked out of the definition of assets now, of a business or profession. In respect of which same percentage, in respect of which same percentage of depreciation is prescribed. Which means that block of assets is a group of assets falling within a class of assets in respect of which same rate of depreciation is prescribed. What are the classes? Classes belong to either tangible assets or intangible assets. Under tangible assets, there are various classes like buildings, machinery, plant or furniture, and under intangible assets, there is only one class, I would say, as all intangible assets belong to one rate of depreciation only. In tangible assets, there is a class called buildings. It could have different assets with different depreciation rates. Likewise, machinery, plant, and furniture are also having different depreciation rates. Say, under buildings class, there are four buildings A, B, C, and D on which depreciation rate applicable is 10%. So, combining A, B, C, and D, we will make a group which will be called a block because it has same rate of depreciation. There are other buildings also, building E and building F, which are depreciable at the rate of 5%. Then E and F will together form another block having a rate of depreciation of 5% under the class buildings. So both the blocks are under building class, but one block represents 10% rate of depreciation, other block represents 5% rate of depreciation. Now it should be clear that what is a group of block of asset. Block of asset is nothing but a group of asset within a class of assets provided rate of depreciation is same. Section 2 clause 18 talks about board. Board, as you all must be knowing, is CBDT, Central Board of Direct Taxes. Board means CBDT, that is Central Board of Direct Taxes, constituted under Central Board of Revenue Act 1963. Board means CBDT, Central Board of Direct Taxes, constituted under Central Boards of Revenue Act 1963. Central Boards of Revenue Act 1963. Next definition, Section 2, Clause 19 defines books or books of account. It defines books or books of account, and it is an inclusive definition. It is an inclusive definition. It says books or books of account includes ledgers, day books, cash books, account books, and other books. It says books or books of account includes ledgers, day books, cash books, account books, and other books, whether kept in written form or in electronic or any digital form or on a cloud-based storage or any electromagnetic data storage device such as floppy disk, tape, portable data storage device, external hard drives, or memory cards. Or as printouts of data stored in electronic or digital form or on storage devices mentioned in subclause B. What do we mean by books or books of account? It includes ledgers, cash books, day books, account books, and other books. And because it is an inclusive definition, the scope is wider, and in the definition itself, other books have been used. The term other books have been used, and when we say other books, many of the books can be included in the definition of books or books of account. Whether kept whether kept in written form, the oldest form of keeping records, or in electronic or digital form, or on cloud-based storage. Cloud-based storage, kept in electronic form or any digital form, or on cloud-based storage, or on any electromagnetic data storage device, kept in electronic or in any digital form, or on cloud-based storage, or on any electromagnetic data storage device such as floppy disk, tape, portable data storage device, external hard drives, or memory cards. Or as printouts of what? Of the data stored in either electronic form or digital form, or on data storage devices mentioned in subclause B. Four things were mentioned in subclause B: electronic or digital form, or cloud-based storage, or electromagnetic data storage, out of which three have been mentioned in clause C, which are electronic, digital form, or storage devices. Next definition is of business section 2, clause 20. It talks about business. Business includes any trade, commerce, or manufacture, or any adventure or concern in the nature of trade, commerce, or manufacture. Either you are doing any trade or commerce or manufacture, or you are busy or occupied in any adventure or concern in the nature of trade, commerce, or manufacture. Both are business. Whether you are directly doing trade, commerce, or manufacture, or you are engaged in an adventure or concern which is in the nature of trade, commerce, or manufacture, this is business. Next definition is of business trust, section 2, clause 21. It says business trust means, it is an exhaustive definition, a trust registered as infrastructure investment trust under the Securities and Exchange Board of India Infrastructure Investment Trust Regulations 2014, made under the Securities and Exchange Board of India Act 1992. Business trust means a trust registered as IIT, that is Infrastructure Investment Trust, which has been registered under SEBI Infrastructure Investment Trust Regulations 2014, which have been made under SEBI Act 1992. The second trust is REIT, which is Real Estate Investment Trust, under the SEBI Real Estate Investment Trust Regulations 2014, made under the Securities and Exchange Board of India Act 1992. You must have noticed both the trusts have been registered under their own regulations. For Infrastructure Investment Trust IIT, there are SEBI regulations Infrastructure Investment Trust 2014, and for REIT Real Estate Investment Trust, there are Real Estate Investment Trust Regulations 2014 under SEBI Act. Next definition is of capital asset. Another one of the most crucial definitions of income tax law. This shall form base of entire chapter on capital gains. Capital asset. Capital asset means, this is an exhaustive definition, means property of any kind. Then there is subclause B, any securities. Then there is subclause C, any unit linked insurance policy. These are the constituents of capital asset A, B, and C. A is property of any kind, B is any securities, and C is unit linked insurance policy. Then comes exclusions, but does not include. And in exclusions, there is a stock in trade, then personal effects, then agricultural land in India. Next exclusion is gold deposit bonds under Gold Deposit Scheme 1999 or deposit certificates under Gold Monetization Scheme 2015, where now some clarifications are given, where foreign institutional investor or the personal effects, foreign institutional investor shall have the meaning assigned to it in section 210 6 subsection 6 clause A, and then it talks about personal effects means any movable property including wearing apparel and furniture held for personal use by the SSC or any family member dependent on him, but excludes. And there comes exclusion of exclusion. We are studying the exclusions. Personal effect is an exclusion. Exclusions, under exclusions, on second number, there were personal effects. And in clarification, we are studying that personal effects exclude what? They exclude jewelry, they exclude archaeological collections, drawings, paintings, sculptures. That's why I have mentioned it as exclusions of exclusions. Personal effect in itself is an exclusion from the definition of capital asset, but it itself excludes jewelry, archaeological collections, drawings, paintings, or sculptures, or any work of art. Next clarification is on population. Population shall mean the population according to the last preceding census, of which the relevant figures have been published before the first day of the tax year. Next clarification is on property. Property includes any rights in or in relation to an Indian company, including rights of management or control or any other rights. Next clarification is of securities. Securities shall have the same meaning as assigned to it in section 2 clause H of SCRA, Securities Contract Regulation Act 1956. This was the overview of the definition of capital asset. It is lengthy, a bit technical. We will be diving deep into it, and I will make it crystal clear in your brains. Don't you worry at all. Let's draw a structure of the definition in order to fit it into our brain. And let draw a structure so that we can compartmentalize its parts in our brain. Let's talk about capital asset. Section 2, clause 22. And if you remember, we had a reference of section 2, clause 22, part 3, capital A and capital B in the definition of agricultural income. I would be correlating the two once we are done with this definition. It talks about capital asset. This definition has a means part and an exclusion part. Means part, there are four subclauses A, B, C, three subclauses A, B, and C. A talks about property of any kind. B talks about any securities held by FII and IF. A, property of any kind. B, securities held by FII, foreign institutional investor, or IF, investment fund. Then there is subclause C, which talks about unit linked insurance policy. ULIP, which is unit linked insurance policy, not exempt under Schedule 2, which is not exempt under Schedule 2. These are three constituents of capital asset. First one is property of any kind. Then second is any securities held by FII or IF. FII stands for foreign institutional investor and IF stands for investment fund. And then C is any unit linked insurance policy, that is ULIP, which is not exempt under Schedule 2. And in the first constituent, property of any kind, it should be held by SSC. Property of any kind held by SSC. Now the exclusion part, it does not include stock in trade other than securities referred to in subclause B, that is securities held by FII and IF or IF, consumable stores or raw materials held for business or profession. Exclusion. First exclusion is stock in trade except securities held by FII or investment fund. Stock in trade or consumables or raw materials. All these are held for business or profession. Any stock in trade except securities held by FII or investment fund and the consumables and the raw material held for business or profession is excluded from the definition of capital asset. Consumables, raw material, stock in trade. Then the second exclusion is personal effects. Second exclusion is personal effects. Personal effects. And what are personal effects? It has been explained at the end of the section. In where part? Personal effects means any immovable property, including wearing apparel and furniture held for personal use, either by the SSC or any family member of his who is dependent on him. Any movable property. Personal effects means personal effects means any movable property for personal use of the SSC or dependent family member held by the SSC. Personal effects means any movable property held for personal use by the SSC or any dependent family member of his, but excludes. The exclusion excludes because personal effects is an exclusion from the definition of capital asset, and now we are studying the exclusion of the exclusion, which is personal effects. So what does not form part of personal effects? It is jewelry, archaeological collections, drawing, painting, sculptures, any work of art. Any movable property, personal use. Whose personal use? Either of SSC or dependent family member. But this exclusion of personal effect also excludes. Personal effects exclude one, jewelry, two, drawings, three, paintings, fourth, archaeological collections, fifth is sculptures, and sixth is any work of art. Say lyrics of a song or a poem or a music composition, etc. Any work of art. These six things are excluded from the meaning of personal effects. Then comes the third exclusion from the definition of capital asset, which is agricultural land in India. Third exclusion from the definition of personal effects. Third exclusion is agricultural land in India. It must be in India, provided not urban agricultural land. It should not be urban agricultural land. The third exclusion talks about agricultural land in India not being land situated, and there are two conditions given A and B, which we read in clause 5 of section 2, which gave the definition of agricultural income. Point A and point B. Point A and point B give an indication that the land talked about in point A and point B is of urban nature. It is out of the village premises. That's why I call these lands urban agricultural land. If the land is urban agricultural land, then it is not excluded from the definition of capital asset. Only agricultural land which is not urban agricultural land is excluded from the definition of capital asset. So to make it simple, I would say rural agricultural land is an exclusion from the definition of capital asset, but urban agricultural land is capital asset. Now, there are two types of urban agricultural land, or there are two conditions given which classify a particular land as urban agricultural land. Condition A says in any area, land situated in any area comprised within the jurisdiction of a municipality, whether known as a municipality, municipal corporation, notified area committee, town committee, or by any other name, or a cantonment board, and which has a population of not less than 10,000. It means point A says if the land is situated within municipal jurisdiction and such municipality has a minimum 10,000 of population, then such land shall be called urban agricultural land. Agricultural land in India, not urban agricultural land. Now, what is urban agricultural land? Urban agricultural land. There are 2 points in urban agricultural land. First is capital A, which says land within municipal jurisdiction having minimum 10K population. Thereafter, there is one more categorization under B, and under that, some other land shall also be classified as urban agricultural land. B point says it widens the scope of urban agricultural land. The point B, in any area within the distance as specified in column C of the following table, measured aerially means by the flight of a bird. Measured aerially means in air, as the bird flies. When we measure the distance not through roads in a zigzag manner but in a straight line as the flight of a bird, it is called measured aerially, from the local limits of any municipality or cantonment board referred to in item A, having population as referred to in column B of the said table. The land is situated in any area, and that area is within the distance as specified in column C. This is column C of the table, measured aerially from the local limits of the municipality or cantonment board referred to in item A. Which municipality or cantonment board? Which has been mentioned in item A, and having a population as referred to in column B of the said table. If it is within 2 kilometers from the local limits of the municipality or cantonment board, and the population of such municipality or cantonment board is more than 10,000 but up to 1 lakh, then that land shall also be classified as urban agricultural land. If it is within the distance of 6 kilometers from the local limits of a municipality or cantonment board who has a population of more than 1 lakh but up to 10 lakh, then it shall still be classified as urban agricultural land. If it is within 8 kilometers from the local limits of municipality or cantonment board and has a population of more than 10 lakh, then such lands shall still be classified as urban agricultural land. And if a land has a character of urbanness of a city in it, it is not rural agricultural land, and if it is not a rural agricultural land, it is a capital asset. Again, we are studying exclusion of the exclusion. The agricultural land is an exclusion, but if it is an urban agricultural land, it is not an exclusion from the definition of capital asset. So let me draw a diagram for you to simplify what we are discussing. In A item, what we studied is this. This is a land, piece of land, and this is the local limits of a municipality. What are these? This is local limits of a municipality or a cantonment board. And this is land. And now, because this land is situated within the local limits of a municipality or cantonment board, this land is urban agricultural land. In item B or point B, we are increasing the scope of the coverage of the urban area. What does this scope say? It says that look at the population and look at the distance from local limits of a municipality or cantonment board. Look for these. Now, if the population exceeds 10K but is less than 100K, up to 2 kilometers measured aerially from the local limits of a municipality or cantonment board shall be urban agricultural land. If the population exceeds 100K but is less than 10 lakh, then up to 6 kilometers from the local limits of a municipality or cantonment board shall be urban agricultural land. And if the population exceeds even 10 lakhs, then up to 8 kilometers from the local limits of a municipality or cantonment board shall be the urban agricultural land. Let me draw diagrams for you. This is the first land, and this is the local limits of the cantonment board. Now we are increasing the area under which the land shall fall and still be categorized or classified as urban agricultural land. So first point says that from the local limits of the municipality or cantonment board, which municipality or cantonment board which has a minimum population of 10,000. If your population is more than 10,000 but less than 100 lakhs, 100,000, that is 1 lakh, you shall cover 2 kilometers, 2 kilometers, 2 kilometers, 2 kilometers. And in this extended area of 2 kilometers around the first municipality we talked about, all the lands situated within shall be urban agricultural land. And if the population exceeds 100,000 but is less than 10 lakh, then this 2 kilometers shall become 6 kilometers. And if the population exceeds 10 lakh, then this 2 kilometers shall become 8 kilometers. Now, the fourth exclusion is gold deposit bonds issued under Gold Deposit Scheme 1999 or deposit certificates under Gold Monetization Scheme 2015 as may be notified by the central government. Gold Deposit Scheme 1999 and Gold Monetization Scheme 2015. These are the exclusions. This is first exclusion, this is second exclusion, this is third exclusion, and urban agricultural land is the exclusion of exclusion. And now the fourth exclusion. Fourth exclusion. Fourth exclusion says gold deposit scheme bonds. I am writing in bracket for understanding. Gold deposit scheme 1999 and gold monetization Scheme 2015. 2015. This was the fourth exclusion from the definition of capital asset. We were studying the definition of capital asset. First, we studied the means part. This is the means part, and there were four constituents of this means part. Three. First was property, second was security held by FII and IF, and third was any unit linked insurance policy ULIP. Then we studied exclusions, not include. First was stock in trade, second was personal effects, third was agricultural land. Exclusions. First was stock in trade, second was personal effects, third was agricultural land. Thereafter, the last exclusion, fourth one, gold deposit bonds under gold deposit scheme 1999 and deposit certificates under gold monetization scheme 2050. And two exclusions had their own exclusions. First, exclusion of exclusion was studied under property, personal effects. Personal effects had exclusions of their own. Personal effects had exclusions of their own, which talked about jewelry as an exclusion, archaeological collections, drawing, painting, sculptures, or any work of art. I have penned down all the 6 exclusions from personal effects. These are the exclusions: jewelry, drawings, paintings, archaeological collections, sculptures, any work of art. Then we studied second exclusion of exclusion from agricultural land in India. Agricultural land in India is an exclusion from the definition of capital asset, but it itself excludes urban agricultural land. And what is urban agricultural land? There are 2 points, A and B. Point A says land within municipal jurisdiction having minimum 10,000 population. I drew it for you like this. These are the municipal limits. These are the municipal limits. Within this limit, any piece of land shall be urban agricultural land. Then part B extends the scope of urbanness and says that go 2 kilometers from the local limits of the municipality or cantonment board, provided its population exceeds 10,000 but is less than 100,000. Again, it says go 6 kilometers from the local limits of the municipality or cantonment board, provided its population exceeds 100,000 but is less than 10 lakh. Again, it says go 8 kilometers if the population of the municipality or cantonment board exceeds 10 lakhs. And within these 2 kilometers or 6 kilometers or 8 kilometers area, whichever piece of land shall be situated shall be urban agricultural land. And once it is urban agricultural land, it is not rural agricultural land. And because it is not rural agricultural land, it is not excluded from the definition of capital asset. This way, I explained the definition of capital asset in its entirety through flowchart and diagrams. Let's read it from the Bare Act. Capital asset means, it is an exhaustive definition because it starts with means. Subclause A, property of any kind held by an SSC, whether or not connected with his business or profession. Property of any kind, whether it be movable or immovable, any kind of property, if it is held by SSC and it has nothing to do whether it is connected with his business or profession for it to be called capital asset. So if the property is held by SSC, whether it is connected with his business profession or not connected with his business or profession, it's futile. That property shall be called capital asset. Condition is that it should be held by the SSC. Second subclause B says capital asset means any securities held by foreign institutional investor which has invested in such securities in accordance with the regulations made under the Securities and Exchange Board of India Act 1992. There is a foreign institutional investor, FII. It has made investment in securities and the investment is in accordance with the SEBI regulations. If the investment is in accordance with the SEBI regulations, purposefully, this subclause has been included in the definition of capital asset. In such case, the foreign institution investor cannot treat those securities as stock in trade. If he has invested in India in securities, and as per SEBI regulations, those securities shall be treated as capital asset, and their taxation shall be dealt with under the head capital gains and not under the head profits or gains, profits and gains of business or profession. Secondly, there is an investment fund specified in section 224 subsection 10 clause A, which has invested in such securities in accordance with the provisions of the regulations made under the SEBI Act 1992 or under International Financial Services Centers Authority Act 2019. There is another party called IF Investment Fund. It has made investment in securities, that too in accordance with SEBI regulations or in accordance with IFSC International Financial Services Centers Authority Act 2019. So if under these two regulations the investment fund has made investment in securities, such investment shall be termed as capital asset. The investment fund won't be allowed to treat them as their stock in trade and take the taxation to the chapter PGBP. No, the taxation shall be under the head capital gains only. This is the reason from the exclusion of stock in trade, these two have been excluded. I will discuss just below. Third, subclause C says, any unit linked insurance policy, that is ULIP, to which exemption under Schedule 2 table serial number 2 does not apply, to which is not exempt under Schedule 2, it is a capital asset. If it is exempt under Schedule 2, that it means it is not a capital asset. Now, what I just discussed in subclause B about FII and IF, that if they are they have invested in securities, those securities shall always be taxed under the head capital gains and not PGBP. That's why that inclusion in clause B was done. And there is one more collaboration for substantiating this fact I have just mentioned, and that inclusion is in the exclusion part. The first exclusion is stock in trade, and which says other than securities referred to in subclause B. Which is subclause B? This is subclause B. Means securities held by FII and IF. So the government has given clarity that even the stock in trade shall not include securities held by FII and IF mentioned under subclause B of section 2 clause 22. So first the government included securities held by FII and IF in the definition of capital asset in the main part. Then when the government was giving the exclusion part from the definition of capital asset, it mentioned stock in trade is excluded from the definition of capital asset, but there they gave clarity and substantiated their inclusion of securities held by FII and IF as capital asset. In stock in trade, they clarified that if it's the business of FII and IF, by business, it's their business to invest in the securities of other businesses, even then they won't be classified as stock in trade. The securities they are holding in other entities in India shall not be classified as stock in trade. What is the implication of this? The implication is this, that irrespective of the fact that FIIs or investment funds are treating it as their business, what they are treating it as their business, the investment in the securities in Indian business units, the government shall always treat them as capital asset and always take the taxation under the head capital gains. Now, the exclusion part. What is excluded from the definition of capital asset? First point, any stock in trade other than securities referred to in subclause B, then consumable stores or raw materials held for business or profession. That stock in trade, those consumable stores, and that raw material which is held for business or profession is outside the purview of the definition of capital asset. Friends, we were studying the exclusions from the definition of capital asset. First one was stock in trade. Now, the second one is personal effects. Personal effects, for example, the furniture at my home, or my car, or my wristwatch, or my wearing apparels, my clothings are personal effects. Third exclusion is agricultural land in India. Agricultural land in India in the first instance is not a capital asset. But such land is not being a land situated. Agricultural land, by its very meaning, has been kicked out of the definition of capital asset, but there is a rider. Rider says that it should not be a land situated in A point or B point. We will study A point first. A point says it is not situated in any area comprised within the jurisdiction of a municipality. Then there is a bracket, and it closes here, the braces. I'm leaving this braces at present. Again, I'm reading it from the beginning. In any area comprised within the jurisdiction of a municipality or a cantonment board and which has a population of not less than 10,000. It means if the land is situated within the jurisdiction of a municipality or a cantonment board which has a population of not less than 10,000, that is, which has a population of minimum 10,000, such land shall not be agricultural land within the meaning of section 2 clause 22 of the income tax act 2025. And because it shall not be an agricultural land, it shall be a capital asset then, and once it is a capital asset, capital gain shall arise on its transfer, that we shall discuss later in due course in the chapter of capital gains. There was a bracket which I left. Now I will read the contents of this bracket, which are whether known as municipality. These are different names a municipality can be called by, or a municipal corporation, or notified area committee, or town area committee, or town committee, or by any other name, that which shows that municipality has different names in different areas of our country. Or a cantonment board, we have studied that. So this was point A, which said that within municipal jurisdiction, minimum 10,000 population. If the land is situated within municipal jurisdiction having minimum 10,000 population, then that land is not agricultural land in India as per this particular section. Let's read point number B. What it says? It says in any area, not being land situated in any area. Again, not being land situated in any area within the distance as specified in column C of the following table. This is column C, which mentions within distance measured aerially from local limits of any municipality or cantonment board not being more than from the local limits of the municipality, and this distance shall be measured from the local limits of the municipality or the cantonment board referred to in item A, and having a population is referred to in column B. This is column B. What this table says? This table says that if the population is more than 10,000 and up to 1 lakh, 2 kilometers shall be the extended area within which the land shall be urban agricultural land. If population is more than 1 lakh but up to 10 lakh, 6 kilometers shall be the extended area within which the land shall be urban agricultural land. And if the population exceeds even 10 lakh, 8 kilometers from the local limits of the municipality or cantonment board shall be the extended area within which the land shall be termed as urban agricultural land. I explained it with the help of diagram also, and you people must have comprehended it very well. Fourth exclusion is gold deposit bonds issued under Gold Deposit Scheme 1999 or deposit certificates issued under Gold Monetization Scheme 2015 as may be notified by the central government. Now there are certain clarifications for this section. It says where FII, foreign institutional investor, shall have the meaning assigned to it in section 210, subsection 6, clause A. Second clarification, personal effects means any movable property, including wearing apparel and furniture, held for personal purpose by the SSC or any family member dependent on him but excludes personal effects means any movable property held for personal use by the SSC or dependent family member, but excludes jewelry. And what does jewelry mean? Jewelry includes, it is an inclusive definition of jewelry, that's why it has a wider scope. Jewelry includes ornaments made of gold, silver, platinum, or any other precious metal, or any alloy. Alloy, what is alloy? Alloy is a mixture of more than one metal. Of such precious metals, with or without precious or semi precious stones, and whether or not worked or sewn into any wearing apparel. So, what do we mean by jewelry, or what does jewelry include? Ornaments. They could be made up of gold or silver or platinum or any other precious metal or any mixture of those precious metals. They could be with precious or semi-precious stones, and they could be or could not be sewn into wearing apparel or clothes, or precious or semi-precious stones, whether or not set in any furniture or utensil or any other art or other article, or worked or sewn into any wearing apparel. Even the precious and semi-precious stones are also jewelry. They could be or could not be fitted into any furniture or utensil or other article, or they could or could not be worked or sewn into any wearing apparel. Second exclusion from personal effect is archaeological collections. What are archaeological collections? When the ASI, Archaeological Survey of India, does excavations, it digs deep into the grounds and try to find the remains of our old heritage. And they find something like they found some remains of a temple under the site of the Ayodhya Ram Mandir. Those findings as a result of excavation at a particular site are known as archaeological collections, and those collections are also excluded from the definition of personal effects, from the meaning of personal effects. Then drawings are excluded, paintings are excluded, sculptures are excluded, and any work of art is also excluded. You people, many of you must be thinking that, sir, why personal effects, although they mean any movable property, they have certain exclusions in the name of these things: paintings, drawings, sculptures, archaeological collections, any work of art or jewelry. Why this is so? This is so because these are quite valuable things, and when they are transferred from one person to another, there could be huge capital gains which will go untaxed if government puts these things in the definition of personal effects, because personal effects by their very meaning are not capital asset. Secondly, these things are used for tax planning. If the government puts these things in the definition of personal effects, tax planning leading to tax avoidance of hundreds and hundreds of crores could be done using these things, because a painting could be sold for even 100 crores. There is no barometer to determine the correct value of a painting or of a drawing or of a sculpture or archaeological collection or any work of art. That's why purposefully government has kept them outside the purview of the meaning of personal effect. Next clarification is on population. Population shall mean the population according to the last preceding census. Last preceding census, of which the relevant figures have been published before the first day of the tax year. Our first tax year is going to be 26-27. And where shall we take the population figures from? From the last preceding census. If this is 26-27, any census which might have occurred in this era shall help us determine the population of a particular area in India. And the last census, for your kind information, let me tell you, was taken in the year 2011. The last census of our country is the census of 2011. So if we have to take the population figures of any area of our country, we will uh, resort to the 2011 census, unless and until a current census is done in our country. Then the next clarification is on property. Property includes any rights in or in relation to an Indian company, including rights of management or control or any other rights. This word property has been used twice in this section. First time it is started the definition. Let me show you. Capital asset means property of any kind. Then it was again used in the meaning of personal effects, movable property. Personal effects means any movable property. Here is a clarification on this term, which says property includes any rights in or in relation to an Indian company, including rights of management or control or any other rights. If you are holding, say, 10,000 shares in a particular company, those are rights in a company or in relation to a company, those shall be included in the definition of a property. And further, the government has clarified that including rights of management or control or any other rights shall be termed as property for the sake of this clause 22 of section 2, which is capital asset. Say we have done an agreement with the shareholders of a company that we and only we shall have rights to appoint 80% of the board members anytime during next 10 years. In those 10 years, because we will be appointing the majority of the board members on the board of directors of the company, we will be having controlling rights in that company. These rights shall also be termed as property. And if we transfer these rights and earn some profit, that profit shall be taxed under the head capital gains, because these rights shall become capital asset. Next clarification is on securities. Securities. Securities shall have the same meaning as assigned to it in section 2, clause H of Securities Contract Regulation Act (SCRA). Where we take the meaning of securities from? We take the meaning of securities from section 2, clause H of SCRA 1956. So friends, this is the diagram of capital asset. The capital asset has been divided into two parts. One is means part and other is exclusion part. In means part, three subclauses have been included, which are property of any kind, securities held by FII or IF, and ULIP. Means part includes property of any kind held by SSC, then securities held by FII, that is foreign institutional investor, or IF, that is investment fund, and ULIP, unit linked insurance policy, which is not exempt under schedule 2. All these are capital asset. Then let's move to exclusion part. There are 4 exclusions in total. 4 exclusions in total. 1, 2, 3, and 4. The first exclusion talks about stock in trade. The first exclusion talks about stock in trade, consumables, raw material held for business or profession. If these 3 things are being held for business or profession, they are outside the purview of the definition of capital asset. There is one exclusion from the exclusion of stock in trade, which is securities held by FII or IF. First, the government made a specific inclusion in the means part by mentioning securities held by FII or IF. Government gave an indication that this is a capital asset. Then when the government was giving exclusions list from the meaning of capital asset, they mentioned stock in trade as an exclusion, but they took out securities held by FII or IF from that stock in trade exclusion, which means even if the foreign institutional investors or investment fund are holding securities in Indian entities as stock in trade, that is, this is their business, they are holding the securities as a matter of business, still these securities shall not be considered as stock in trade for the purpose of this particular section. In that case, they shall be termed as capital asset, which was the case under subclause B of means part, securities held by FII or IF. Thereafter, second exclusion talk about personal effects. Personal effects are outside the purview of the definition of capital asset. They mean any movable property for personal use of either the SSC or any of his dependent family member. For example, your personal car, your wristwatch, your clothing, your furniture, your television, your laptop, which is of personal use to the SSC or his any of his dependent family member, are outside the purview or ambit of the definition of capital asset. But there is an exclusion to this exclusion which says that these six things, jewelry, drawings, paintings, archaeological collections, sculptures, or any work of art, shall be outside the four corners of personal effects, which implies that if it is a jewelry or piece of jewelry, or it is a piece of drawing or a piece of painting or a piece of archaeological collection or a piece of a sculpture or any work of art, it shall be treated as capital asset as and not personal effect. Third exclusion is agricultural land in India. Agricultural land in India has been excluded from the definition of capital asset with a rider. Government says, Rukja beta, agricultural land is not capital asset, but there is a rider that if this agricultural land is of urban nature, then we shall treat it as capital asset only and won't give you the exemption of agricultural land. What is urban agricultural land? Which is situated in a urban kind of area and not at the countryside. Let's study the urban agricultural land. There are 2 points, A and B. A point says land within municipal jurisdiction having minimum 10,000 population. Say this is municipal jurisdiction and this is a land within this municipal jurisdiction, and this municipality has a population of 10,000, then minimum 10,000, then this land shall be urban agricultural land. It shall not be treated as rural agricultural land. B point says B point extends the area for the coverage or classification of a particular piece of land as urban and not rural. B point says that the area of coverage is extended by 2 kilometers from the local limits of the municipality or cantonment board, provided its population is more than 10,000 but up to or less than 100,000. Up to 100,000 you can consider. Then the coverage area shall be extended to 6 kilometers from the local limits if the population exceeds 100,000, but it is up to 10 lakh. And if it exceeds 10 lakh, the coverage area shall be extended to 8 kilometers. So as the population of the municipality is increasing, its adjoining areas, its suburbs are being treated as urban and not agricultural. And once the land is characterized as urban, it is a capital asset because it loses the character of agricultural land or a land situated in a village area. Last exclusion from the definition of capital asset is gold deposit scheme 1999. The bonds held under gold deposit scheme or the deposit certificates held under gold monetization scheme 2015. So this was the definition of capital asset. It has two parts, means part and exclusion part. In means part, there are three subclauses: property of any kind, securities, and then ULIP. An exclusion part has stock in trade, then personal effects, then agricultural land in India, and last gold deposit scheme 1999 and gold monetization scheme 2015. There is one more important thing, which is the meaning of property. Twice the property term has been used in this definition. One is first in the subclause A of means part, and then it was used in the definition of personal effect, any movable property. Let's study the meaning of the property. Property includes any right in or in relation to an Indian company or any management or right of control. So if you are having a right in or in relation to an Indian company, say you are holding shares, then that is a property. Or if you are having holding management or control rights in a company, that too is a property. So this was the definition of capital asset. Here, the technical and one of the most important and crucial definition of capital asset comes to an end. First, I explained it through a flowchart and diagrammatical presentation, and then I discussed the Bare Act with you. I hope no stone was left unturned so far as this particular definition was concerned or explanation of this definition was concerned. You must have gained quite a bit after going through the definition of capital asset. I take your leave for today, and rest shall be continued in our next lecture of this Income Tax Act 2025 English Lectures series. Bye bye. Sayonara.